So we actually wanted to shift gears into Rich. Everyone's begging for Rich's updated oil thesis. Before I get into Rich's oil thesis, which I'm actually kind of curious to hear where the things are at. Last little bit on the real estate front is, yeah, as you guys know, I'm fairly active in Calgary, so I keep a close eye on that housing market. And so I was chatting with a couple of large developers over there, and it's interesting enough. What's happening is so that the condo market in Calgary was like flooded. Like there's a lot of land in Calgary. Condos typically aren't a good investment because there's just a lot of land. So you can continue to expand. You can buy a single family house in the inner city for $550,000. So it's like, well, why buy a one bedroom condo? What's happened over the last 6 months or so is all the investors from Toronto have actually been flooding the Calgary market and snapping up all these pre-sales. Basically, you have these big wig Toronto realtors that are pre-sale people, where they basically only focus on investor base that sells pre-sales. And they're basically they were approached. A lot of them were approached by developers in Calgary. They put together a pitch deck, and they sold all of their investors in Toronto of the idea of buying in Calgary. Hey, look, you can go buy an inner city condo in Calgary, a one bedroom for $250,000 in cash flow. And so, interestingly enough, that's all. That Calgary market has just completely taken off from East Coast investors. And obviously, I think the Calgary market, as much as it's booming because it's cheap, some of this is oil dependent as well. And so the thesis right now, I think, is incredibly bullish. The sentiment around oil is bullish right now. And so I think that might be playing a part of it. But I'd love to hear, Rich, your thoughts in terms of how you see things shaping up here.
Yeah. So, I mean, I'm on the record as saying I'm an oil bull. I'm an energy market bull. And it's something that it's one of those things that's sort of played out how I've expected. And I think it's really something really important to talk about because we're Canadians. And I think because the oil is so important to our economy, a sizable chunk of not the people who work in it, but the amount of our current account balance, et cetera, et cetera. But I just wanted to step back and sort of just give a quick little, as the oil prices continue to ratchet up, the energy and oil and gas sector outperforms. It was the best performing sector and one of the best performing subsectors last year. It's the best performing sector by a mile this year. And I continue to be really, really bullish. And I think it's important that, our listeners and sort of people like me who are Canadian and are investors sort of get a handle on sort of what's going on there and why I think it's just so important. So I'll quickly just nail out a couple things. And if you guys are more interested, I'm always happy to speak offline. But so I think it's also a function. I think politically, I think it's also one of those classic examples of unintended consequences with respect to politics. And when you sort of let, your ideals get in the way of, the brass tacks, the facts. So demand, I think oil. So this idea that oil consumption is going to fall, I think is just something that everyone needs to sort of get out of their head. Yes, eventually we will use less of it, but right now global oil consumption is about 100 million barrels a day. Each barrel of oil is about 159 liters. So that's per day. That consumption of oil, people forecast it falling. I think it's important to understand where that consumption comes from and who's the next sort of in line to consume it. So, and I'll make this quick. So 38% of that oil is consumed in the Asia Pacific region. So you click right off the bat, you think India, you think China with 2-3 billion people, but then you have the Indonesias of the world, the Bangladesh, Pakistan. I mean, the population numbers with respect to their consumption is incredible. After that, you have North America, so US, and then you have with 25%, the EU with roughly 10, and then in third, well, not in third place, but Africa, which is very, very important with respect to population and is obviously very poor, but only consumes 4% of global oil. Now, you have to understand where the consumption comes is nominally, is going to come from where the population growth is and where people are accelerating into sort of new strata of economic, potential GDP per output and et cetera. And to the point is Oil's a freaking miracle. It's an engineering and scientific miracle. It has an extremely high energy density. It's relatively cheap to extract. We know exactly where it is. It's accessible. And so when people say that global oil consumption is going to, just stall out at 120 million, 105, 110 million barrels a day, again, a day, it's incredible the amount of energy that we consume. And it's important to know that countries, that's very bad. Continents like Africa that have hundreds and hundreds of millions of people who are just starting to consume, fridges, cars. So much of that is energy. And guess what? Africa has a lot of it. So they produce about twice as much as what they consume. And I think it's important to, it's cheap, it's accessible, and they have it. And so this idea that we should be, I don't want to get into the moralistic argument about energy and telling poor people that they should not consume cheap and accessible energy. But I think it's important to understand where the demand is coming from, where it's likely going to go. And the top headline message is that global oil consumption is not going anywhere. Add to that the fact that everyone's mothballing their nuclear power plants, which is a conversation for a different day. The idea that you're going to replace the literally trillions of terajoules of energy consumed per year with a bunch of solar panels, which by the way take lots of carbon and high energy to build, and wind farms, again, same. It's just not going to happen. I think there's this, frankly, a lie that's been told over and over, and I think we just need to move past it. And then on the supply thing, which I'll make a bit shorter, which is really, really why I'm so bullish on this sector, is short-term inventories are super low. So I've shared this chart on Twitter. We won't share it on this space because it's just sort of too esoteric, but inventories are back down to sort of the average that we've seen for a long, long time. They were quite high and they're down. Why are they down? Because in their infinite wisdom, countries have been, climate change is important and must be taken seriously, but unless supply, so all the policies have basically been centered on supply. And what do I mean by that? They've people like Mark Carney, who, anyways, I won't say, if you can't say anything nice about, don't say anything at all, has basically spent lots of his effort and time trying to squeeze out the funding, increasing the cost of capital for these oil companies to produce oil. And so what you're seeing is these companies are getting squeezed out of the capital markets. It's more and more, that's the goal. And so what does that mean? It means it's more and more expensive to take on new projects, and they're more reticent to take on projects that may be risky and might have, lots of reserves. So what does this mean? It means that CapEx, so capital expenditure, and the search for and basically getting access to reserves has collapsed. So how do you measure that? CapEx relative to sales, CapEx relative to total assets for publicly traded companies is basically at a 25-year low. And other things that you would measure supply are things like rig counts. So what's a rig? Literally an oil rig. There's offshore rigs, onshore rigs. There's natural gas rigs. And then you could say, Richard, we're more efficient per rig. We can produce more. Fine, but they're still, again, they're on the floor. And the other thing that seems really important is the OPEC spare capacity argument, I think is also sort of false. Yes, OPEC has lots. What's OPEC? Is the Organization of Petroleum Exporting Countries, OPEC. And they control about 35-40% of the global oil supply. And, there's all this talk about them increasing their quota. It's a cartel, and it's a cartel of countries. And they get organized in order to try their best to control the price of oil, to extract the most amount of money from the global economy as they can. The trick is, over the last 20 years, their power has obviously fallen as the US has become a much larger producer of oil. And there's always this bearish argument on oil saying, well, OPEC can always just increase capacity. But the thing is that the same companies that have been, squeezed out of the capital markets with respect to funding CapEx, a lot of them, they do it in these countries. So Royal Dutch Shell, for example, has lots of business interest in these OPEC countries. So what we're seeing, so basically the upshot is you have a situation where demand, in my view, is not going anywhere, is at best going to remain flat at best for the next 5, 10, who knows years. And a situation where the lot of the climate change policies and frankly, the fact that these companies have been getting absolutely trounced in the markets over the last several years, the divestitures, a lot of the stuff has basically reduced the supply, A, in the short term, and B, has reduced the ability to meet the new demand, e.g. there's the number of new reserves coming on board is coming up. So for me, that's the reason I'm so obsessed with this topic, is because oil is by far and away the most important commodity that human beings rely on every single day. I'm interested in the truth and making money. And when those two things collide, I love it. And I think it's really important as Canadians, before we, turn around and say, we should just shut down all of our oil industry. And I think we should be very, very, very careful about doing things like that. And I think that, now the question, we're going to get into Russia in a second, in the short term, is war bad for oil demand? Keith will let us know when we shift gears. But yeah, there's my oil rant. Hopefully you guys learned something. Any questions from the class?
Yeah, before we get to Keith's commentary, I'm going to try to dumb this down and summarize everything Rich basically said, which is essentially oil and energy is life.
Thank you. That's exactly a really good way of putting it.
Energy is life, and energy is productivity. In order to be a more productive society, you need to consume more energy. And basically, we're at a situation today where the renewable sector isn't able to replace oil. And so in order to be more productive, we're going to end up having to require and be more reliant on oil, at least in the near term. And I think it's a particularly precarious situation, because if you look at it, global debt to GDP, for example, is 365%. The global economy has never been sort of more over levered. In order to sort of bring down that denominator from 365 to, say, whatever 300%, you essentially need to try to grow your way to lower that ratio. And one way to lower that is obviously to have higher productivity, which again is going to rely on more energy. I don't think we're necessarily going to get more productivity. So what they'll probably policymakers will opt to do is basically hit Control P and just basically try to print productivity through central bank balance sheets. So that's hopefully recaps everything Rich said, because I think that was really a good masterclass. Keith, I kind of want to get your thoughts. If you have any additional commentary on what Rich or I just said, and then of course pivoting to Russia, Ukraine, and some of the geopolitics on that front.
Yeah, Rich hit a pretty good home run. You hit it pretty well there, Rich. Just some things to add to it. Again, for everyone to understand two things: climate change policies are being adopted by the Western world, and that's what the main driving course is happening here. So we'll talk a little bit about that. The other thing is what people don't understand is all of like shipping and transportation around the world. It runs on oil. It needs energy to move. So you can't simply, people talk about cars becoming electric, and that's another thing. They got to get their electricity off the grid, which most times is coming from oil or coal anyway. The alternative, like wind and hydro, it is increasing, but it's still quite small relative to everything else. But like all these shipping containers that are moving around the world, like they're not being powered by wind or hydroelectrical. Like they need oil to do that. And then of course we have natural gas. Of course, you can push that in pipelines if you're allowed to build a pipeline. Those that are allowed to build a pipeline, if you want to ship it across water, you have to liquefy it. So you have LNG, liquefied natural gas. And when they put that gas on a ship, guess what's going to power the ship?
Wind?
No. So, and again, with airplane, like, it go back to what Rich was saying. So and the other thing to share with everyone, like, so for example, here in Canada, so our Minister of Natural Resources, guess what his job was before?
climbing towers.
Peanut salesman.
Absolutely. He was the minister for, I don't know what the department, but climate policy, basically. So he's very much on the green side. So, that's
He was
why.
climbing. Let's, for everybody that doesn't know, he climbed the CN Tower in protest for it was an anti-oil thing. He climbed the CN Tower and literally was arrested. Like,
he was a
Greenpeace
activist. He was
right.
He was big in Greenpeace, and
Okay. So I mean, it's fine to share your views on stuff, right? That's sometimes it's unacceptable, but sometimes it is acceptable. But the point is, though, for Canada, there were some pretty big policy headwinds against the Canadian energy sector. There will be opportunities. I believe strongly in this theme called abandoned assets. I mean, that's out there as well. But from a global perspective, from my view, is that if you're really bullish on oil, Canada may not be the place to play that if you're doing it from, say, an equity market perspective. But Rich hit on all the key points there. One other thing to share with you, how complicated the energy complex is. So this is, again, is anecdotal, and you take it for what it is. It's my understanding that 1 or 2 board members of Exxon were appointed by BlackRock, because BlackRock is, they host most of the shares through their funds that they're managing, and they're really big on ESG these days. That's the direction they're gone, and whether you like it or not, it is what it is. So they're specifically put on the Exxon board. So, the biggest publicly traded oil company in the world, energy company in the world, to get these guys to stop producing oil and everything, basically. And what Exxon did, and again, this is what I'm hearing for some guys I know, they said, okay, this is not a bad thing. We're going to train these 2 new board members or educate them on what's really happening and how important oil is to the economy, to our social system, political system, financial system, and so forth. And what happened is gradually these 2 new board members, they're coming on side. Now they're starting to appreciate that you just simply can't cut off oil and, let's start producing alternative energy. Again, it's extremely difficult. As Rich said, with global demand, at worst, it stays flat. I mean, I think all the fundamental factors are very strong for oil. From a financial market perspective, we're going to get ebbs and flows here. And so this is where I'm excited about. We can still have a super spike coming in oil. And I don't think it's going to be that super. But again, you really have to distinguish between the economic and policy side and the long-term factors that are going to drive the price of oil with the short-term financial markets, because things can get out of whack pretty quickly. And so this buy and hold strategy with oil, I don't think you're going to get some great opportunities to sell what you have and better opportunities to load up again. But a lot of the models that we look at right now, crude oil might have a bit more upside to it, but you might get a really great opportunity to add even, to reload, add even more to it. So that's all what I have there on the sector. Again, incredible long-term opportunity.
Can I round this out and just make my last 2 points that I think are really important? Number one, climate change is a serious thing, and hopefully human beings will come to terms with the real way of dealing with that, nuclear power. But the climate rhetoric obfuscates what a marvel of engineering and science the exploitation of fossil fuels really is, and how cheap energy has been vital in emancipating the world's poor. And that is something I want to drill into everyone, whether you're listening to this or not. And I think that, and the other thing that I think that's really, really important is, and it's a Pyrrhic victory with respect to the financial markets. It's a Pyrrhic victory. What's a Pyrrhic victory? I think he was a Greek general. Basically, he won the battle. He won the war, but every single one of his soldiers was killed. I can't remember his real name, but it's something term called a Pyrrhic victory. And, unless both supply and demand change in tandem, all this climate policy is going to have the perverse effect of making large oil companies even more attractive, notwithstanding the near-term fluctuations. And that's the two main takeaways I want. That's really what I've been that's what I've been itching to share with you guys. And so thank you for giving me the opportunity to do so.